Well, joining me now to talk more about the landscape from Coral Gables, Florida, is Holly MacDonald-Korth, CEO of KDM Financial. Holly, thank you so much for joining. And let's start at least with the markets here. What are you watching when it comes to the major averages?
So we typically, because I am a middle market mortgage lender, we follow the Fed and interest rates most carefully. And obviously, there's been a lot of volatility lately. And with Chairman Powell's comments, we're all kind of in a wait and see what's going to happen, the impacts of tariffs, whether that's going to cause inflation or whether it's going to slow down the economy, and which way the Fed's going to have to move as a result of that. But it's hard to tell right now, as everyone knows.
Yeah, a lot of uncertainty, obviously, and we had a guest on earlier, Holly, who was echoing many of the things that you just said there, that you got to prepare for a variety of outcomes. How have you seen the uncertainty impact the market in real time?
So, people changing their minds. So we're a direct lender. So I deal with borrowers on a regular basis, and there's been a lot more demand for bridge loans because people want to get into a product they can be in for a year or two before they go into permanent financing. They think that interest rates are going to come down in the long term, and so they'd rather be in a temporary product and pay a little more to wait that out than get into some permanent financing. And that's been a trend over the last couple of years since this historic run up in rates. And so there's been a lot of demand for that bridge kind of product.
One thing that I assume, though, might be helping your market to some extent is the continued push that we see from companies to get people back in the office in the wake of COVID. We're coming up or about on, in fact, the 5-year anniversary of COVID. What is the impact there?
Yeah, so we have, the office market obviously had a lot of challenges over the last couple of years and the fallout from COVID and work from home. And we have seen in offices that are in our portfolio that there's been a lot more demand for office space, especially we see a couple of trends. One is for urban office, people want more creative kind of space. But we've seen a lot more demand in the suburban office as well, where people want to be working closer to their home if they do have to return to office. And so we've seen pretty good demand in the class A-, B+ office space in the suburban areas as well.
It's interesting because I know banks obviously are servicing some of these loans. What role have banks played as the market has evolved the past year?
So, banks have, the regional banks in particular, almost 50% of their balance sheet is in commercial real estate loans. I think the last report I saw was like 47% or something in that neighborhood. And so they really don't have the ability to put a lot more CRE on their balance sheets right now. And that is causing a lot of traditionally bank borrowers to look for private lenders like KDM in order to fulfill their financing needs. And I don't foresee that, overweight to CRE on bank balance sheets changing in the next few years. So in the near term, say the 3 to 5 year timeline, there's going to continue to be a lot of demand for private lenders.
Interesting. What else is on your radar, Holly, when it comes to this space?
So always looking at, macro trends. So how are DOGE cuts going to filter through the economy? Is that going to affect jobs, and is it going to be mostly localized to DC? How are unemployment numbers going to change? Is that going to have a cascade effect throughout the economy? And is that going to affect, what kinds of real estate is that going to affect? Maybe rent, you're not going to be able to raise rents in multifamily, or is it going to affect retail, shopping, or different kinds of goods, and then how that affects the underlying real estate. So really looking for things that can endure through a potentially down economy. Hopefully we don't get there, but right now we have to have all of our facilities, monitoring trends.
My last question to you, Holly, is particularly about how some of these spaces, for instance, commercial properties, if there is demand, continued demand, to turn them into more apartments or even multifamily properties, knowing that we continue to see rates high and the housing market be pretty tight.
Yes, so we are seeing a lot of opportunities for what we call adaptive reuse projects, turning something from one purpose into another. So whether it's turning an old factory it used to be turning a factory into an office, now it's turning an office into a multifamily or mixed use property. We're seeing a lot of those, and also hotels. People are converting older or just mismanaged opportunistic hotel purchases into multifamily apartments, because obviously we have a shortage of housing, and in areas where office demand is down or hotel demand is down, they're turning those into multifamily, which can be really interesting projects when they're done well.
Holly MacDonald, CEO of KDM Financial. Holly, thanks so much for joining us.
Thank you.